Good afternoon, YouTube. Sorry, I'm running a little late with this video. Um, but I'm gonna do an end of the week stock market analysis. We're gonna go ahead and talk about the news that came out today. We'll dissect that. We'll go over the big market movers and shakers, and then I'll give you my outlook for next week. May even talk about a little bit of live trades or go over some trades that I have on now currently. Maybe some that you may want to follow me into. Of course, at your own risk. And I'm gonna come right back after the buffer with some good info. All right. I'm looking at my notes because I wrote down some stuff, so I don't want to miss anything. First of all, you're looking at right now the I got the Qs up. Before we go there, let's take a look at the S&P 500. Got the ES futures down about 7 handles on the day, which is pretty much flat. The Nasdaq is down about 0.85%. That's almost, a whole percent. Uh, the Dow is actually up. The two are diverging. We're going to talk a little bit about that. It's only up about 1/4%. Uh, we got the Russell down almost a whole percent. And that move just occurred probably in the last few minutes or so. Like the Russell literally, let's put this on a 1 minute and let's take a look at the 1 minute right there. So if you're looking at this, um, I'm going to move everything down just to see if I can move this over and make this big. Here we go. So this just occurred this is a 1 minute chart. So this is at what? You had a low at 225, maybe an hour ago. You had this big move right here, and then it moved up, and now we're back testing the lows of the day. Always be careful when you see the smalls or I would say the mid caps, the small to mid cap stocks making a move either direction. They're a little bit more volatile. So when you see those move in a certain direction, they tend to generally move the rest of the market, right? So, and that's that. The bonds are down. Gold is basically flat. You got a slight move in gold. But what I do want to talk about, Bitcoin is getting smoked. It's getting hammered. And one of the things about Bitcoin, right now I'm showing the Bitcoin futures. We're going to draw it back out, go to the daily. For the most part, when you're looking at this, is the Bitcoin's been getting hammered, since the end of basically, if you go back up here, the down move started in November, right? And so Bitcoin's going down with tech. Tech is, which is the Nasdaq. So you got your tech is down and you got Bitcoin going down as well. The hodlers will be tested, right? I'm going to pull out. Now, those are the Bitcoin futures. I'm going to show you the spot Bitcoin, right? Which trades pretty much 24 hours. And I'm going to show you why I say hodlers, and you're going to get tested. We're going to see just what kind of, if you got diamond hands or paper hands. I wouldn't hold it, but I don't understand why holding something till it goes all the way down to the bottom. So of buying it when it's cheap and selling it when it's high, you're at lows like right now. And you see this? So this is the level where you're at, right? So if it breaks through this, which it could hold. But if it breaks through this is your support level right here. So if I was to I'm gonna draw what I'm trying to show you guys right here. Let's see if it right there, right? There's your little spot right there. You got that? You're right there, right? So see these wicks. A lot of people would trade, like if I seen a wick here and a wick here, you generally want to get long when you see stuff like that. So this would show you support where it went up, pulled back here, took out this high, it came back to that level, and then the bulls came in and took it higher. So you're right at that level again. So this to be honest with you, um, even though I think the whole concept of hodling is stupid, like in and of it, just the concept of it, right? Um, it holding something when it's going against you, right? When you should have sold it when you made profit, set a certain limit instead of being greedy. Set a limit to where you want to take profit at and get out, and then wait till it comes back down, and then buy it when it's low. Buy cheap, sell high, right? That's the name of the game. So, but right here, if you're still holding here, you might as well continue to hold. To be honest with you, if you didn't sell it here and sell it here, it makes no sense to sell it here. Um, this isn't a bad. I'm not advising anybody to buy right here, but this is a pretty good spot to buy for a bounce if you're going to buy. And I'm just being, and I'm gonna call it the way I see it. You show me a chart, and I tell you, no matter what I think about it fundamentally, what I would do. Right. So now let's go take a look at now what I another thing that I wanted to talk about was this. So the jobs numbers, right? So they had this job numbers report that came out where it was a disappointment because it was a low number of jobs that was added to the overall market. So, but unemployment is low. So they're saying, well, okay, we didn't add as many jobs, even though they lowered like the expectation. That's another thing. They lower they keep the expectations at a certain point to where they know they can hit them, right? Um, but and they still didn't achieve that the job growth that they wanted, but at overall unemployment numbers are low. So, and I think that I don't know if this is done purposely or if it's just that what we see on TV is they're so far off from mainstream media, like from everyday living folk, right? Everyday people. And people aren't rushing out to get like people I think I know me personally with the pandemic it put stuff in proper perspective. So you don't have people rushing out here to get jobs that they generally hated before the pandemic, and they don't feel like they're being paid enough to take the stuff that they take on these jobs, so people aren't rushing out to go get those jobs. That doesn't mean that people are just sitting at home. People are figuring out other things that they can do because they had to when we were on lockdown. They figured out ways to make money, and people are doing that. People are going for themselves. And you also have people who are falling out of the job market, right? That doesn't mean that they're not working. They've fallen out, like, so they collected unemployment to a point to where they drop off, like they ran out, and then they're no longer receiving unemployment, and they're probably not even looking for jobs anymore. So these reports don't take into all of these different concepts that like regular everyday people are dealing with, as far as like so take for instance, yesterday I went to a particular, I'm not gonna name the establishment, but I went to this establishment to pick up an online order that was placed at home. Went to go pick the order up, and the place just shut down while I was there, like waiting on my order and to pick it up. I wasn't on the outside in the drive through. They cut the lights off, walked out, and shut the place down. Today had to go about trying to recoup the money, you know. But they just shut it down. Dude walked outside, was like, "We closed, buddy." I mean, what I'm gonna say, what I'm gonna do, it's not. I don't know why they did it. They just did it. They were not supposed to close. They weren't supposed to close till like 10. They shut the doors. It was like 7:43 when I was up there. They just shut it down. So there's no telling. Maybe they were short staffed, overworked, sick. I don't know. So what's going on, man, is like regular everyday people. Unless you in like one of these fields that's paying a lot of money, these people ain't rushing to go out here and do these jobs. So, and you had the president come on, and he talked and he tried to talk the market up. They ain't hearing it. And you looking at the market, and I'm gonna show you. So you'll be saying like, Ray, why is the Dow up or diverging? So the Dow is up, Well, it pulled back a little bit, and then the rest of the market, like the Nasdaq, is down. So you would say, why is that? Because the Dow only is comprised of like 30 stocks, like your blue chip stocks, right? And most of these stocks, if I'm not mistaken, all of them, pay like dividends. So they don't really move that much, right? So, but eventually, if the market continues to suck, because Apple's in that, and Apple is up today though. So Apple and Apple, the largest stock we have in our stock, has been continuing to go up. But what happens when Apple get hit? Apple gets hit, excuse me. So if Apple gets hit, then you'll see everything. Look at, like, Facebook is down off of its highs, going sideways. Amazon has been in a sideways pattern, and look, continuing to starting to go down the past this week. So look at Google. Google, which was going up for the majority of the past year, start going sideways, and then this week we got it broke out of this pattern, right? So if you was watching the channel, you'll see I made money somewhere up in here when I got short Google. Um, you had to go back through one of the previous videos. So all of these, look at the FANG, they're starting to go down. Let's look at Microsoft. Microsoft, look at this week, down. Right in here to support. So you got a gap right here. You guys know I look for my bounces at the gap. So if you see, if we add, doing my technical analysis on Tastyworks, it's a little different, but we're gonna get through it. So if we were to go here, right here, here's my gap. So if I come all the way over, we're right here at the gap. Let me see if I can make it come all the way over here. Ooh, that look ugly. I'll clean that up later. But you guys see what I'm talking about. Right here is your gap, and then when we draw that gap all the way over, now we got some wicks in this area. You see them? Now we got a wick right here, which looks like a hammer, like Thor's hammer, which maybe you could get a bounce right here. So, and then I'm gonna talk about ways to get long, because like when you look at a lot of these trading channels and you look at stuff on CNBC, Yahoo News, stuff like that, they're talking about buying the dip of bounces and stuff like that. Where I wouldn't come in here and just buy 100 shares of Microsoft at $314 per share. You're crazy. There are other ways to get long right here where you can make money and not be exposed for as much margin or buying power anyway taken out of your account. You can sell a put right here. You could come here. I'm gonna talk about some different things. I'm gonna move through to a particular trade that I have on currently. So little Tesla, you see, I already got the spot drawn for Tesla. If you're dip buying, if you want to get long, this is the next spot that I see for Tesla right here. You see my gap? I got a gap right here, right? So what I did was I drew out a little circle. So if you want, now actually, I'll be honest with you. I have puts in Tesla. I have leap puts in Tesla. I am betting on Tesla to take a croak, right? And you would say, well, why would all the positive fundamental news? I really don't care. So it's more of a hedge. So if you have, not in this portfolio, if you have a 401k that you're managing, or you have something and you're long all these stocks in there, you're long stocks. You got a 401k, you got a retirement, you're long some type of stock, whether it's some bonds, you're long something. So why not to hedge all of those longs, buy a few puts, where if something was to happen and stuff went to the crappers, you know what I'm saying? You would make a lot of money. You at least hedge what you're going to lose in the long positions. I never understood like getting double long. If something happened, you just, now you hoping and praying that you can recover what you've lost in your gains. So I'm long stock all through my retirement account. So why not have some puts to hedge that? So if something was to happen, and we do have a lot of risk in this market. So I went over Facebook. We took a look at Facebook, sideways, high IV rank, ripe for premium selling. Apple, 29.3. You want to see it get up over 30. Amazon, you got a 36.3, ripe. You even got some sort of like head and shoulders pattern right here. You don't see it? You got a shoulder here, and you got a shoulder here. It already completed the pattern. It looks like you broke it neckline right here, and now you're down into here. So what's the next level? If we back this all the way out, what are we looking at? Let's go to the let's look at a weekly. All right. So this is a weekly 3-year. You want to see, this might be a good place if you're a believer in Amazon. If you want to get long, here's some support right here. It went up right here, came down into this area, bounced. You got a wick. You got a lot of wicks right here at the 3,200 level, right? But if it breaks this level, if Amazon breaks this level, look out. And that's what I'm telling you. I put a line right here at 3,200. I'm gonna put a line right, put a price target right there at 3,200. Breaks that line, look out. You can see it. Look out below, because then this is where I could see it consolidating some more. But from here to here, that would be my next support level, and that would be at 2,500. You can get a $700 free fall right there with I'm talking about straight. Like once it gets through here, give you a little bear flag, boom, and you out. It's gonna flush out all the so-called holders. But most of the people that's holding Amazon, if you holding a $3,200 stock, these are people with a lot of money, because retail isn't really in here. Not at $3,200. Google, look at Google. Look at this trend. Look at this moving average right here. This wildest moving average. What happens if you break here and then flag? Oh man, you got a flush coming. So that's why I bought. But same thing. This is a weekly on Tesla. Same thing, man. I can't justify staying long after all of this. You hoping? Look at Netflix. Netflix already doing the stuff that the other stocks hadn't done yet. Netflix is getting killed. If you're in Netflix holding, I'd get out. I would have got out yesterday, last week. If you go back and look at my video I did on Tesla and Netflix back in the middle of December, you'll see before all this happened, I already had it mapped out. You can see that my fibs are on it, right? I'm telling you. And I got an alert on Netflix. Netflix could fall all the way down to around 470. So now it may not go straight there. So you may that doesn't mean that you can't trade in between and maybe get a bounce somewhere. Where would your bounce be looking? Should have gotten it right here. You may get it in here. It may go all the way down to here, around this 530 level. Somewhere in here you could get a bounce. Let's talk about. We got 5 minutes to go, so I want to go talk about the Nasdaq, right? So in this is a $2,000 account that I set up to do trades on the YouTube channel. The first trade was a winner that I put on. That's in the queues. Here we go. Right? I'm gonna open up the chains over here. So I'm gonna show you. You see the chains? I'll put this trade on. You can look and see it closed out on January 4th. I actually put it on December 28th, and I held it. I seen it, the setup. I was like, I ain't gonna get a chance to wait till the new year to actually put the trade on, but I did chronicle it on the channel, and then I closed it out on January 4th. Bought it for $80, sold it for a buck 24. That's $44 profit. If you hover right here, you see winner. First winner of the new year. Woo! So you can follow it. Then now, follow at your own risk. I got to put that disclaimer out there. So now I do have another trade that I put on. I put this trade on yesterday. Let's go back. Let's take a look at it. I sold a put spread. It's up 30. It's getting ready to close out because the market looks like it is taking a poop right now. Well, it's going down a little bit. So here it is right here. Man, I'm queuing it up for you. I'm going to show you what I did. I sold the, listen, come on. Trying to show you these guys before 4 o'clock. Right here at 42 days. I sold, now this is where I sold the 405 and the 410. I would not do this trade right now if I was you. You're not going to collect enough premium because the position is already moved. If I were going to put this on today, I will come maybe right over here at the 400, sell the 400. I will buy the 405. Hold on, I got sell the 400, buy the 405, and bam, you're going to get 114, which is what I got. I will sell the 23 Delta, buy the 17 Delta, and that's going to give you 114. That will give you a 75% probability of profit with 85% probability of 50% of your max profit. And that's the trade that I will put on today. What you're doing there is you're getting bearish. You're selling a call spread. You need the market to go down or stay sideways. It has to come back up here to beat you. You're telling the market, come beat me. Here's the expected move. Come beat me. Right? And so right here, you see, I sold it. I'm up on the position, 38 bucks right now. I am collecting $1.50, let's call it 55 cents a day in theta decay. So I'm positive theta, which means that basically, I won't capture all of that, but basically what that says is that, hey, I sold a decaying asset instead of buying a decaying asset. So what that means is I'm getting paid to hold this. You make money for holding it. You don't need to be right directionally when you sell an option. You just don't need to be wrong, right? You're the insurance seller in this particular case. And as you can see, the market, as it continues to go down, I do profit directionally as well. I've been in this trade for, as you can see, if you look over here, days open, one day I just put it on yesterday, right? So that's the second trade of the year in the Nasdaq, and I will continue to short tech. I'm going to do another video this weekend about AMD. I'm going to mark that up. I'll do that on TradingView, and in my TradingView account, it's not, I don't trade in that account. I just use it to chart, and I like some of the charting tools in there. So I'm going to do like a video and just mark that one up and tell you what I got going on at AMD somewhere else, right? Right now, the bell is getting ready to ring. We got skew. That's the bell. If you look at your skew, right here, I like to pay attention to skew. The skew is at 140, right? So anything over 130 for me is bearish. And skew is just talking about the option pricing, or the price of the options, calls versus the puts, showing you that puts right now are more expensive than the calls. So you can sell puts and collect good premium for them if you want to get long. I would much rather prefer selling puts to get long versus buying calls. Let's talk about it. So let's say I was looking at Tesla and you buy this call. Tesla has an IV rank of 40.9. So as Tesla continues to fall, I'm guessing, I don't know for 100%, but more than likely that IV rank will rise if Tesla continues to fall. If you buy shorter term dated call options, while IV is expanding. If that if they take the vol out of that call option, you could be right directionally, but not, and you may make a little money, but not make as much as you want to make because you bought the call. And they do what is called it's called a vol crush. You crush the volatility from the stock. So if I was in so unless you're gonna come out and buy leaps. Now you're not subject to vol crush the further out you go. It doesn't affect you as much. But when you're within, I would say anywhere within 3 months, like I would say if you're like 70 days in, maybe even 97, I would go past 97 days. I wouldn't even chance it here. But anywhere within here, I would say 3 months and up, I would say 97 days and up, you're going to be subject to vol crush. And so I would come in here, me personally. And the one thing about Tesla, the premium is so juicy, so far out, man, you can literally come out. That's the expected move right here. That's one standard deviation. Tesla, you can literally come out. See this dotted line right here? This is two standard deviations. This is a 2 sigma move. You can come out here and sell a 1 delta and collect like 147, $147 on 42 days. So you gotta say, what are the chances? And if you look over here, you got like a you got a 99.5% chance of making money. Right? So if I was gonna, I ain't saying I would do that one, but look how far you can come out to make money. And instead of coming in here buying a call and buying shares, and then 42 days out, and then it go against you, you can get creamed and lose a lot of money. And you can sit out here though and pick and just uh and just nitpick these little cheap plays. Trust me, people are doing it. You see this? You got 2019 contracts out here at the $600 strike, right? Look right here at the 650. You got 100. You got 1,079. Excuse me. You can see all out here 6,000 right here at 750, and you can come way out here and collect $1,000. So, and still have a 90% chance probability of profit. And if you settle for 50% of this, you got a 94% chance, right? So there are ways to get long selling premium and create a high probability trade. So put the odds in your favor and then get long, as opposed to, if you come and you buy, say you come out here and buy a call, I don't know, just pick one. And you come out here, let's just say you would have come out here and you gonna pay that much for it? And you gonna pay $6,000 for it, right? Look at it. Now you can make more money, but you got actually showing you got a pretty good probability right here of making some money right here. But it's gonna cost you, and you need to be right, because at 42 days, if you were to buy this, and I do see it does look like people are buying this call right here. You can look and see the volume. I doubt very seriously that selling it at 1100 right there, but it could be. I would think that people are buying this and they're paying, $6,100 for it. They got 58% chance. They got a 26% probability of profit. So they got it's a low probability. So the system is telling you like, hey, you got a low probability right here. You're buying a low probability option. Like the just pure math. This system doesn't know, like it's not calculating how many cars they on track to sell. It don't care about that. This is straight math. So if you do this trade, 1,000 times, that's your probability of profit. So yeah, I just think that that's one of the things that take into. I think that right now, or over the past couple years, investors, traders, whatever you want to call them, have been spoiled within what I would call an accommodative market. Everything's been going up. It hasn't mattered what you've done. It's not that It's not that we're good. Look at AMD. Let's look at AMD over the last year. It doesn't matter. Look at any stock. Yeah, it's not like we good at picking stocks. Everything's going up. Doesn't matter. Nvidia. Look at it. Everything's going up. Look at the S&P 500. If you just buy an ETF, look at it. It's just a straight up step. Like you going like walking upstairs. Up, down, up, down, up, down, up, down. Oh, look at it. So it doesn't matter what you click on. I can click on any one of these, any stock. It's gonna look like that. It doesn't matter. So that's the thing. So it's not like we just good at picking stocks. The Fed came in and everybody got stimulus checks and they increased the unemployment rate and everybody got bailed out. People they was giving out EIDL loans and grants and all of that happened. So of course the market was gonna go up. At the very what you're seeing now is the Fed minutes came out this week and they said they're gonna put a halt to it. And they said they're gonna put a halt to it immediately. So this is what you and now the market is saying, no, bump what you said. All those great fundamentals went out the window and it's just to prove it. Tell me what because Tesla numbers they beat on expectations of deliverables and all of that. The market does not care. All they know is that the Fed said they're going to increase interest rates. So with no more cheap money. And look, and so and you can see that the market does not care about any of that stuff. And most of the and to be honest with you, probably most of this selling is algos. I don't know for sure, but I'm guessing that a lot of these hedge funds have algorithms set up. And them algorithms were programmed by people, but those people programmed them with certain metrics. And when they see those metrics or those social sentiments, then those algos are triggered. And this is what you're looking at. So, but the good thing for the people that subscribe to my channel, please hit the like button and share. Is that I'm gonna show you how to make money on the way down. I'm gonna try to keep negative delta, and you may say, well, what does that mean? If you look right here, um, you'll see that right here, this B with this little delta sign or whatnot is my beta weighted delta. I'm beta weighting this portfolio to the S&P 500 or the SPY, right? So this is a -4. So basically, I should make $4 for every dollar that the SPY goes down, something like that, right? And this where it says ETF, this delta symbol is -4.95, and that's just showing you the outright delta of the position, right? That's the Nasdaq, so it's a bearish position that I have on, and this is your theta, making money off of time decay. So I want that to be positive, and I want this to be negative. So that means I'm carrying negative deltas. That means I'm profiting off of the market going down or sideways for the most part with the positive theta. And that's what we're going to try to do to try to stay ahead of this market. We're going to try. That doesn't mean that I'll be successful, but I'm going to try to be transparent with this and we're going to do the best that we can. So right now we got a little mojo working, and my idea for this is to continue to short tech. We want to stay short tech. At least I do until they show me a reason not to be short tech. Tesla is Netflix is getting the crap beat out of it, and you may see a little bounce. Now, nothing goes straight down, so Netflix may see a little pull back into this area, right? So you may get a little bounce next week, maybe. Nvidia, oh, look at Nvidia. Just look, it looks like all these stocks are right here at a level where if they break right here where the little gap was, it's back right there testing again. It came here, it bounced. It came back. It bounced again. We got a flag, and now here we are. Is it going to bounce again, or is it going to go through here? If Nvidia breaks through here, and I hadn't really been paying attention to this, if Nvidia breaks through this gap, the next spot is right here. This is the next level, and this is a gap. So look, guys, I'm telling you, if it goes through here, here's the spot. If it breaks past here, we got one more spot. We got this will be the next spot for me. I gotta get used to doing that. Will be my next spot, right? And so that means that that'll put me right what here at the 240 level. So let's put a price level right here at 240, right? And then let's see, let's put a price level right here where it looks like it's at 270, something like that. So we want to see it. Let's see if it gets through here. If it gets through here, that next level would it be tested will be 240 in the video, right? And I want to save this so that if I pull this up again, I won't have to do that again. I'm gonna save that chart setting, and that's that. So hey guys, I hope you got something out of this. Hit that like button, hit the subscribe button. Be on the lookout for the markup on AMD. I got something sweet for you on AMD. I got something real sweet. And with that, I'm gonna be out, guys. Peace.